This is the Average Guy Network, and you have found Financial Tech in the Guide Rock Capital Management Commentary, recorded on January 16th, 2014. I'm your host, Jim Collison, broadcasting live from the Gallup campus here in Omaha, Nebraska, and we post the written commentary each week out at theaverageguy.tv. Financial Tech brings you the latest market commentary from the award-winning Andrew Hunt, CFP and president of Guide Rock Capital Management, located right here in Omaha, Nebraska. If you'd like to receive a free copy of the written commentary in advance, or if you have questions or comments that we can read and answer on the show, send us an email. You can send that to Andrew at guiderockcapital.com. You can also call us now. We've got a number. You can leave a message, a recorded message. We'll play it on the show, or just read it. Send that or call us 402-478-8450 and leave a message. We also have all the links to subscribe to the show, both audio and video, out at theaverageguy.tv. Andrew, happy Thursday morning to you. Good to have you back. Happy New Year, our first financial tech and market commentary of the year. How are you?
I am very well, Jim. For those of you in Omaha, Nebraska, hang on today. It's supposed to be 55-mile-an-hour wind gusts, so batten down the hatches and hang on to your car doors so that you don't ding a bunch of your neighbors. Well, the People's Republic of China appears to have taken the words of American industrialist Henry Ford to heart. Ford once said, "There is one rule for the industrialist, and that is, make the best quality of goods possible at the lowest cost possible, paying the highest wages possible." Well, last week, we learned from CNBC China's annual trade was more than $4 trillion in 2013. That pushes China ahead of the United States and gives it a standing as the world's biggest trader. According to the New York Times, China's annual trade surplus in U.S. dollars terms was the largest since 2008 and 12.8% ahead of 2012 surplus. In other words, China exported more than they imported. It's really interesting to note, imports to China increased significantly. In fact, imports rose more than exports, which reflects strong domestic demand. According to an expert quoted by CNBC, that demand may have been driven by rising wages and a growing middle class. Here's what the New York Times wrote. They said, quote, "Export gains suggest that despite years of predictions of trouble for China's export juggernaut, it has not yet been derailed by fast rising costs for blue-collar labor, by appreciating Chinese currency, or by foreign investment shifts towards other lower-wage Asian countries. Blue-collar pay has soared between five-fold and nine-fold in dollar terms in the last decade, wrecking China's reputation as a low-wage place for export-oriented manufacturing. Get this, a decade ago, a company paid about $75 a month for entry-level industrial workers, which provided virtually no benefits. Now, a company pays $570 a month plus $100 a month in government-mandated benefits," end quote. That's pretty wild. The economists forecast China's economy will overtake the United States in 2019 if economic growth averages 7.75% a year in China. I'm going to say that again, 7.75% a year in China and 2.5% in America. And if inflation averages 4% and 1.5% respectively, and that's between 2010 and 2020. In 2013, the Organization for Economic Cooperation and Development forecasted growth in China would accelerate to about 8.2% with 2.4% inflation during 2014, and that was according to Reuters. Growth in the United States is estimated to be 2.8% to 3.2%, with inflation at 1.4 to 1.6% for the year, and that's according to the Federal Reserve. So lots to watch there in China. It's a really interesting economy. Boy, it almost feels like the U.S. in the 1930s, just full speed growth and just watching it explode. It's an interesting story to watch. Well, is the glass half full when it comes to unemployment, or is it half empty? You're probably familiar with the famous saying about there's the three types of lies. There are lies, there are damn lies, and there are statistics. When trying to parse the implications of economic data from the government and non-government organizations, the myriad of ways in which statistics can be sliced and diced quickly becomes apparent. December jobs report, which was released last week, is a prime example. The unemployment rate fell from 7% to 6.7%. However, just 74,000 jobs were added in the United States during the month. That's less than one half the number of jobs economists had anticipated. So there was less unemployment, but the number of new jobs created didn't meet expectations. Does that mean the employment picture is weaker than experts thought? Not necessarily. According to The Economist, payroll gains revised up in November to 241,000 from 203, suggesting that some of the December's hirings may have been pulled forward. The 2-month average of 157,000 is probably a better picture of reality than either month's individual tally. Finally, the household survey, which, while typically more volatile, is still a useful check on the better-known survey of employer payrolls, shows employment rose 143,000, which is one reason the employment rate plunged to 6.7 from 7. So does that mean the unemployment picture is positive? Well, not necessarily either. The number of people participating in the labor force in the United States was trending south before the recession started back in December of 2007. Our workforce has been shrinking because of cyclical factors like people giving up on finding jobs because jobs are hard to find, and structural factors such as baby boomers retiring and the participation of women in the workforce has been leveling off. All in all, 3.9 million Americans, which is about 38% of all unemployed workers, have been unemployed for at least 27 weeks. Are they discouraged? Have they retired? Are they children? There are probably some statistics out there that could provide further insight. And here's our quote for the week. This is from Confucius. The superior man acts before he speaks, and afterwards speaks according to his actions.
All right, Andrew, very good. Hey, we last year we were given tips, kind of end of the year tips of things to do, and I'm going to share. Usually I ask you, but I'm going to share one of my tips this time. Maybe a new thing to do in 2014. One of the things I've always been trying to do, and this is a great thing to do this time of year, especially in January. I've always tried to get this account started this time of year, and I've never gotten it done. And this year I made my way into the credit union and got that set up. I really didn't have to go into the credit union. I could send a note in to get it done. But you know what I mean. And I got that set up, and so every month a certain dollar amount comes out of my check. It goes into account so we've got this bank of funds. You would think, hey, Jim, you're in your mid-40s. You should probably have gotten that done before this. Well, I didn't, and maybe you didn't either as a listener. Maybe you've been trying to do something like that, get something set up automatic, get some savings going. January is a great month for that, and I know a lot of folks are struggling as they deal with the Christmas crisis from last year and the payments that are coming in or what have you. Hopefully you had a great Christmas. But January's, as you're going through the pain of maybe trying to pay for Christmas, hopefully it was a great Christmas for you. This is a good reminder. Get into your financial institution of choice. Get something set up automatic, and by the time October comes around next year, you'll have a nice fund of dollars to work from. And guess what? January next year will be a lot better, maybe, than January this year. So a little tip, a little advice from us here on financial tech and the market commentary, one of those things, just a good time of the year to go in. Andrew, anything you want to add to that?
No, that's great. I always say that Christmas savings saved my marriage. Christmas savings is one of the single best things we ever did to just relieve the stress from the holidays, so you can really sit back and enjoy the time with family and friends, not worry about the cash out. And you could save as little as $20 a paycheck. Just set it aside into your Christmas savings account. You look up at the end of the year, and there'll be a little less than $500 sitting there waiting for Christmas spending. So just $20 a paycheck, you guys. That's all it takes, and it will whole outlook on Christmas.
Yeah, very good. It's one of those things. I'm glad I got set up, and it'll be interesting to kind of watch that grow throughout the year. And I'm just going to hand that to my wife as we get into October and say, here you go. This is Christmas. And we won't have to worry about having budgeted for it or other things, right? We'll have automatically saved for it. So good opportunity. Speaking of automatic, if you're new to podcasting and you're looking for a way to easily listen to this podcast each and every week, many of you have done this. We ask you to consider using Stitcher, Stitcher.com, available on any browser as well as both on Android and iPhone platforms. a great way to listen to podcasts, both at home and on the road. In fact, more on the road than ever. Stitcher just made an announcement that they're in more newer vehicles that are coming out, and their goal really is to be in every single vehicle that's available out there. There will be a day you'll pull your car into the garage, it will automatically start downloading for you, or you'll just have a plan on your car that has data on it, and you'll stream that stuff right to your vehicle. Talk radio has moved. It has moved onto the internet, and it's going to be moving into your car. It's already on your phone, so you could be listening to it now. Stitcher.com, Stitcher.com. Financial Tech Podcast is what you want to search for. We say it's education for your ears, and be sure to visit Guide Rock Capital. That's just GuideRockCapital.com. Follow Andrew on Twitter. He is just Andrew D. Hunt, and get all the show notes to this show, all the past ones as well, out at theaverageguy.tv. Now, Andrew and I say thanks for listening. We'll catch up with you next week. Hopefully, we've got some busy weeks ahead of us, trying to get this in every week. But remember, be smart about your investing. Guide Rock Capital Management, Inc., or Guide Rock, is a registered investment advisor that is registered with the state of Nebraska and located in Omaha, Nebraska. Guide Rock and its representatives are in compliance with the current registration requirements imposed upon investment advisors in the states in which they maintain clients. Guide Rock may only transact business in those states in which it is registered or qualifies for an exemption or exclusion from registration requirements. Important information describing Guide Rock's business operations, services, and fees can be viewed on the SEC's website at www.advisorinfo.sec.gov. Guide Rock will provide Form ADV Part 2, which serves as the firm's disclosure document to all clients. Copies of Form ADV Part 2 are also available to interested parties upon request. All investment strategies have the potential for profit or loss. Past performance is not indicative of future results. No current or prospective clients should assume that the future performance of any specific investment strategy, or product made reference to directly or indirectly on this video, website, or indirectly via hyperlink or any affiliated third-party website will be profitable or equal to past performance levels.